All right. Good afternoon, everyone. I hope I'm audible. So we are going to start off right now, and we will wait for the rest of them to join as we continue with our session. First of all, I'd like to thank everyone for joining us for today's webinar organized by Web. I'd like to thank our knowledge partner, Lakshmi Kumar and Sridhar and attorneys, for joining us today. We are looking forward to a wonderful session. I am Siddharth and I handle the product marketing at Web. So today we have here with us our guest speaker, Mr. Debabrat from Metro Cash and Carry India. He has an overall experience of 20 years across industry verticals like software development, software services, investment banking, and the wholesale retail sector. He is with Metro Cash and Carry India Private Limited in the position of Senior General Manager Systems and has been with Metro for the last 13.8 years. In his current capability, he is responsible for the complete systems related to merchandising, accounting, master data solutions, supply chain, and warehousing solutions, as well as implementation of legal and compliance requirements across various products of Metro Cash and Carry India. Mr. Debabrat has been instrumental and deeply involved in implementation of GST, e-Invoice, and e-Waybill solutions for Metro Cash and Carry India. We are absolutely glad to have you here with us on this session today, sir. I'm sure the session would be helpful for the audience hearing directly from you.
Good afternoon, everyone. Thank you so much, Siddharth, for the introduction. And it's a pleasure to be online and sharing my experiences on the e-Invoice part of it. So I'm ready as you are.
Okay, wonderful, sir. Thanks a lot. I'm sure most of you would know about Metro Cash and Carry India. However, just to give you a gist of the company, Metro Cash and Carry is the wholesale division of Metro, a leading international specialist in wholesale and food retail headquartered in Germany and operates in more than 35 countries. The company provides custom solutions to meet the regional and international needs of its wholesale and retail customers. So that's a small gist. I'd like to give it to Mr. Debabrat if you'd like to speak a little bit about the company.
Thank you, Siddharth. So Metro Cash and Carry basically so it's a global company headquartered in Germany. And apart from that, when Metro entered into India, it was in 2003, if I remember. So from there, we have around 28 different stores right now. We call them as distribution centers.
Okay.
Across pan India, and majorly focused on the south of India, as well as having distributed networks across various parts of the India. So the major customers for us, because we are a wholesaler, we are a B2B organization.
Right.
So
right.
for us, it is always customers who are able to sell, or those who are having licenses to sell to the end consumers. So these are our registered customers who register with us, and only we can cater to these set of customers. So the major segments to which Metro Cash and Carry caters to are the hotels, restaurants, caterers, and one of the big chunk, and especially where India is specially special for across different metro countries, is the trader segment.
Okay.
So where we have the complete Kirana stores who are our customers, as well as the third segment is the company and services sector, into which all the sectors of company and different small, medium, and large segments of the companies and services come into. So these are the three types of segments we cater to. And apart from that, Metro Cash and Carry, apart from having the walk-ins, that is the customer walk-ins and all, we also have our own apps for our e-commerce, which is again dedicated to our own customers.
Okay.
So that's how we have been spreading our wings.
Got it. Got it. Got it, sir. All right. Thank you so much for that introduction, sir. And let us get into today's questionnaire. So, moving on to the very first question. I hope all of you are seeing this. So, what ERP do you have in place, and what is the version?
Okay, so it's thanks for the question, Siddharth. So, in terms, if I can say, it looks like a simple question, but for Metro, it's a bit pretty complicated one. So, the since we do not have one single solution which caters or which generates invoices, in terms of solutioning point of view, Metro has various products from where the invoices are generated for various purposes.
Okay.
Of course, the invoice generation for the trade part, where the trading actually happens, is the highest.
Okay.
And amongst all the products and solutions, everything is homegrown. So, which means that we have all our products which are created basis Metro requirements and are used across all Metro countries.
Okay. Okay.
So, the background of the products can be, let's say, Oracle based, or can be a SAP based, can be a Siebel based,
Okay.
but whatever we have, it is totally customized for Metro needs.
Got it. Got it. Got it.
So the
So,
products we
yes, sir.
cater to are majorly related to checkout and billing,
Okay.
uh, things related to stock transfers, which happens in the merchandising system. We also have a SAP based warehouse management system, as
Okay.
well as we raise invoices for services. So yeah, that's the complete environment what we have.
Okay. So, considering customization, you have an in-house team for all the developments.
That's true.
Okay.
So we have our own team who does the development,
Okay.
and taking into consideration from different other things, because when we look at it from Metro point of view, um, these are very core needs and these are very special needs which is a B2B segment can cater to. So that's the reason it was best decided as a strategic point of view to have solutions in house.
Okay. Wonderful, sir. All right. So, we will move on to the next question. So, Metro Cash and Carry being an MNC, multinational company, and headquartered in Germany, when did you start planning for e-invoice implementation as 1st October 2020 was made mandatory go live from the government side? So, how did you go about this entire planning process, sir? I would like to hear it out from you.
Great. So, Metro, as you stated, it is headquartered in Germany, but also one more part is, which is correlated to the first question, is that we have centralized teams which are who are sitting at Germany and Romania and are responsible for the software development and maintenance of all products which are used by Metro countries.
Okay.
So similarly, for Metro Cash and Carry India also, whenever there are requirements which pop up, even if it is required to certain business purposes or legal purposes, we take in the requirements and the development, etc., is done at our headquarters. So since for this e-invoice, it was a pretty complicated topic, and looking at our variety of products in which we need to implement. So that's why the planning was very essential in order to move towards a smooth implementation. So we started actually our planning much earlier, towards November 2019.
Okay.
But many things at that time were not very clear.
Correct.
And we would also like to thank our partners, Web, in this, where they were very supportive in terms of providing us the information related to the APIs which gets released from the government, testing that, and also what we did is that we invested this time in order to gather a very strong project team comprising of various product owners, development, project management. We also identified resources for training and implementation, and we brought in a team who is ready for the implementation. So the agile team which we built for e-invoice implementation, this helped us in moving in a very fast forward mode, as well as we started defining the enhancement and processes for each product. So all this started during the month of January.
Okay.
And during this time, we had multiple rounds of technical discussion with our web team members. And of course, they were pretty fast in providing us with the API structures to initiate the development. So we had gone ahead and implemented the API route where all my
Okay.
products have the APIs, call the APIs, and then generate the invoices on real-time basis.
Okay. Wonderful, sir. So it looks like you had a very planned and structured manner that was mechanized from the very beginning itself.
Yeah.
So any deviations as such that was ready to be tackled.
Yep.
Okay, wonderful. So we move to the next question. With multiple billing counters and having to generate e-invoice for customers then and there, how is this process maintained and streamlined?
Yeah, that's actually a very very typical question for our kind of sector.
Right, right.
Yeah, because and I remember when I was attending certain e-invoice seminars given by GST team, etc. So always there is question on my mind that how would the end customers be reacting? How will this be will this be fast enough? So and considering checkout, when I say checkout, it is the customer billing. It is the final touch point of the customers and is also a very highly sensitive area as well as the solution. So you can imagine that any delays or issues at the billing counter would lead to customer dissonance. It would lead to impacting my net promoter scores. So it was very highly important and critical for us to have the solution implemented seamlessly with zero impact for the customer. So what we did basically for our billing multiple counters is that irrespective of the number of counters what we have, the anyways the API calls were implemented. Of course, the fast responses for the APIs helped us a lot. And at the
Okay,
billing counter, the major task was to manage the customer's expectation. So you can imagine the customer standing in front of the billing counter, and if it delays, then there is always a question mark coming up on the face of the customer. What is happening?
agreed.
So we try to manage that with very detailed communication to our customers. We fixed up posters highlighting the change. We put up, we ensured that all our store team who are catering to our customers firsthand are going through a very detailed training, which gets implemented for them. And of course, to implement the solution and also keep the checkout system very light so that it doesn't get into the state of checkout counter hanging or something like that. So that's our process which we tried to maintain, and it has worked pretty well.
Okay, great. All right. Moving on to the next one. So your business is a bit more complicated as yours is B2B business. But your customers are right there in the store and you need to give the invoice then and there, like we discussed earlier. So what happens if there is an error? Do you have a separate process to handle the same?
Yes. So we did put this particular part of the error handling in our when we were implementing the project,
Okay,
and the complexity is high for in this particular case, and that too if my customer is standing in front of me. So since and one benefit what we had is that I have my customer registered in my system. There is no walk-in customer who comes in. So
okay,
that's the reason we already know that which customer is a GST customer and which customer is not a GST customer. Yeah. Of
okay,
course, there are customers who are non GST but are registered with us because of different licenses, shop and establishment license, etc. So, for which they are registered with us. So on the scan of the customer card, we definitely identify at our POS counters that if it needs to be redirected for the B2B API callings, etc., or it has to be via the normal route of it. So the API was definitely implemented, and since it is real time in nature, so the QR code gets printed before, and only then the invoice gets generated for the customer.
Right.
And these were achieved within seconds, which was good. Now, of course, during the course of time, we definitely encountered errors in the form of invalid GSTN or inactive GSTN if certain thing customer has not done from his part at the GST portal,
Right.
or some master data errors, etc. So we try to handle those errors. Of course, we have built in a process for that. Now, correcting that immediately does not stand a chance for us. So that's the reason we had built in a solution. And of course, we have taken the help of web in order to get an insight to their portal, correct the transaction which was done for the master data error or whatever error is to be done, corrected, and then repush for the IRN generation or for the QR code generation. And this is the process which we have implemented in order to cater to the errors as well as providing the data or to the invoice to my customers also.
Okay. Okay. All right. Wonderful. Um, the next one is, do you have unregistered dealers? So how do you deal with the same?
So when we say, just to define unregistered dealers, is that in technical terms, when we say unregistered dealers, these are non-GST customers.
Okay.
So as I said, we have a variety of customers where the customer might not be registered to GST basis whatever parameters and all, but he will be having licenses in order to sell it to end customers. So those are the customers who are also registered with us. And of
Okay.
course, we have a lot of customers on those segments. And the billing counters or the solution did not change for them. It was normal as it is. Since the dynamic mode was done for each of our billing counters, so it did not impact my unregistered dealers at all or unregistered customers at all.
Okay. So I actually have a confusion over here. So when you mean unregistered dealers, can they also be the direct walk-in customers?
No,
Okay.
there cannot be any walk-in for Metro
Walk-in at
Cash and
all.
Carry. So it is always, we have a very strong process for customer acquisition and customer registration, wherein it goes through multiple levels of validation of the licenses, the
Okay.
proofs, etc., what has been submitted. Once the customer is registered in my system, only then the customer can start a billing for my in my store. Otherwise, it is not possible.
Okay. Okay. All right. So Metro Cash and Carry is the largest widespread wholesale company across our country. So what were the challenges that you faced during the implementation phase?
Yeah. So with now 28 stores and some stores in pipeline, I think, and one of the largest wholesaler in its segment, we focus majorly on our customer satisfaction as well as complying with all the statutory requirements for that. Now, the challenge for us was to have all billing counters. So when I say all billing counters, there are some big stores. Let's say Bangalore, or we have in Kolkata, we have in Hyderabad,
Okay.
big stores where we have counters like which are going to 50 or 16 number, the billing counters.
Okay.
So to have all the billing counters ready by the morning of 1st October, and when I say morning, our stores opens at 6 o'clock in the morning.
Okay.
So the massive activities were planned and executed during the last week of September 2020
Okay.
in making the billing counters ready with all the new patches. There were repeated trainings which were done for the team. It
Mhm.
also involved proper and regular communication to all the customers, also gearing up internal employees for the massive change, because we need to give them some FAQs in order to handle the questions coming from the customers. And one thing which also helped us is that we had during the month of September, government had opened up the API for testing in production also. So what we did is we did not wait till the last moment to go live, but started migrating to have the solution in the system.
Okay.
And as and when this happened, we got to know the transactions. If there is any errors, we rectified it immediately. And we could say that we were ready before 1st October. So that night was only a night out for us, for the technical team, of course,
Right.
but it was only about wait and watch. since the solutions were implemented. So that's something which came out good in terms of the implementation part of it. But of course, there was a lot of planning behind that. So yeah, that answers
Absolutely.
the question. Yeah.
Great. Okay. So moving on to the next one, what are the industry-specific challenges that you faced while generating invoices, which are not currently addressed appropriately in the IRP portal? So how are they being currently taken care of?
So though I would say that this is a good and a seamless process of the API part of it, but at certain times, due to the volume and where Metro has faced or where we have faced
Okay.
some latency in the API responses,
Okay.
which leads to delay in invoice printing and also resulting in some errors at the end. So with some high volume of transactions, I would expect that if there is some auto load balancing or auto load distribution which could happen, uh, which could definitely help in overcoming these challenges. How are they been currently taken care of? Of course, I would correlate to my answer for the error correction which happened. So we had to look at it from a point of view that what are the transactions which were supposed to be generated, which have an error, and then every day this activity goes on in order to correct that, generate that, and provide it for my customers.
Okay. Like everyone knows, Metro being one of the biggest, in fact, the biggest, supply chain organization. So, how is the entire supply chain acquainted with this new process and their responses in case of lag in reporting?
Well, I would say that the implementation of e-invoice has been a major change for everyone. And it was a very and it was, but I would say it was not very difficult to get acquainted to the new process. So since sometimes back e-way bill had got introduced. So since e-way
Correct.
bill is already a part and parcel of the entire supply chain, it actually required a bit of disciplined approach in order to ensure that we have invoices with the QR code. So with some detailed communication and training, so this was made possible. I would say that there were instances where I would get calls very late in the night from my supply chain team that my truck cannot move because I'm not able to generate a e-invoice because there is some issue at the API side of it. But those are the things which are incidents, I would say, which had been well handled also of our partners web also, where they had been supporting us in rectifying this quickly, resolving it. So I would say that it was pretty smooth for the entire supply chain also. So not only the supply chain part of it, we also have delivery to the customers, where this also got impacted, and there was a change for everyone into this. So of course,
Okay.
a new process required some good change management. So I think that went well. So I would say it was not a pretty challenging topic for us. Everybody were
Okay.
sensitized on that.
Right, right, right. Got it. Got it. Okay. So before we take up this question that we see on the screen, I'd like to take a minute or two and launch a poll. I hope everyone is seeing this on the screen. So have you decided on an e-invoice partner? So I'll give an exact minute and a half on this before I end the poll. Also, everyone, thank you so much for joining. So if there's any questions related to the topics that we're talking about today, you can put it on the chat box. We will be taking it up towards the end of the session. All right, I'll be ending the poll right now. Thank you. Yeah. So coming back to the questionnaire, so do you think in the long run, e-invoicing would replace GST return filing and e-way bill process?
Well, actually, a very interesting question, and I would say yes, absolutely. Now, with the current implementation of e-invoice feeding data to GSTR1 and e-way bill, It is
Correct.
not very far that the mode of GST filing would be very simplified and all reconciliation activities would be instant and immediate in nature. So it's more of a what we have seen across as tax as a domain is now slowly getting into IT being more focused here in terms of giving solutions. And I'm definitely positive that we will be witnessing a lot of new feature-rich integrated approach for these statutory topics. So yeah, I'm just waiting and watching what next from the government will come across.
Right, right.
So yeah.
Okay, all right. Um, there are multiple time-based restrictions. That is, for instance, get e-invoice data only within 72 hours of the e-invoice generation itself. Do you think these should be relaxed or extended?
At this stage where a lot of companies are moving towards stabilization of the solution implementation
Right,
and looking forward for reports, improvisation, and then there are also might be regular requirements which might come out from authorities, etc. So I would say that an extension or relaxation to the certain time limitations, etc., would be welcome measure. So that could give some kind of space in order to stabilize the companies who are just beginning to, and a kind of gaining momentum those who are already into the flow.
absolutely, sir. Absolutely. Because right now, I think it is a little shaky, and a lot of the organizations are still trying to get used to what's going on.
True.
All right. So we have seen that even companies above 500 crores have faced multiple issues during integration, like we discussed before. So how do you think this will impact small players post 1st April 2021?
Well, for me, I'm very hopeful that all issues will be resolved by March itself to ensure our small vendors face lesser and lesser issues from 1st April. The major objective, if I understand from a government point of view, also was to implement the invoice with 500 crore companies to get a first-hand feedback also on the
Okay,
implementation. And this was a planned approach, and I think this worked. So, where a lot of companies who are tech enabled, who have the capability in order to build the solutions, could leverage out of it, give the feedback to the government, and then they would look at expanding that. The time period between October to April has also given time for a lot of tech companies to come out with multiple solutions
correct.
which can support vendors in their integration and implementation at a faster rate. So that actually gave actually a time also with the various inputs coming from the industry. Many tech companies started building up their whole solutions for that. That would give a edge for the smaller vendors, of course. Now, if I come specifically for Metro has already implemented solutions, let's say to scan our vendor invoices, to capture their QR code, or basically the IRN from the QR code
Right,
which they are sending
right.
at the time of goods receiving. Of course, from 1st April, the count of invoices coming to us will increase. So, as a team, Metro has been proactively reaching out to the respective vendors
Okay.
and keeping the communication channel strong, saying that do not miss out this important one. You please be ready for that, all those things. So, I think that's where we are trying to gear up our small vendors who are already coordinating with us.
Okay. Okay. That is wonderful to hear, sir. So it looks like you've been a very supporting hand to the smaller vendors as well.
Yes, yes, for sure.
Okay. Okay. Wonderful. So that actually brings us to the end of the questionnaire with you, sir. So I really hope that this session for the last 30 minutes has been helpful for the audience directly hearing from you. Once again, thank you so much for your time today, sir.
Thank you so much, and thank you so much for having me here.
Thank you, sir. Thank you. Thanks a lot. All right. So moving on, we still have the second half of the webinar that we'll be covering from here on. So before we get into the second half, I'd like to speak a little bit about the company, that is Web Solutions. So I'd like to give a small briefing about the company before heading to the second half of the webinar. So Web is a 20-year-old company as of today. Web was initially known as Wipro e-Peripherals, which was part of Wipro itself. And in 2000, we became an independent entity. So here, as you see on the screen, we have multiple solution offerings. So managed print services, digital transformation solutions, intelligent office automation solutions, and retail billing solutions. So let me start off from the bottom. Web retail billing solutions, wherein here we manufacture billing machines for retail stores. So here we have about 2 lakh customers span India. And moving on to the corporate side, we have web managed print services, where we provide managed printing services for 600 plus odd customers. So to give you a gist of the business here, we deal with printing hardware based on requirement, and you would be charged per print. So this is what we do with web management services. And this is again just a gist. And here we are number 1 on that part. Also, Web Solutions offers the latest range of best-selling intelligent office automation solutions. Web is the authorized distributor alongside Rico to sell Rico products in India. So here we have a wide range of enterprise digital printing, office automation, and industrial solutions on offer. And lastly, we have digital transformation solutions. Here we provide mainly 2 solutions, 2 services. First one being GST solutions, and secondly, document management solutions. So let me give you a small gist on both of this, starting off with document management solutions. So here we offer tailored custom solutions with the help of a low-code development platform, and offer document management, business process automation, business intelligence, and digital signature. So underneath this, we have solutions for smart content collaboration, remote working, etc., etc. And the second product being related to GST. Here we in fact hold the license called GSP, that is GST Suvidha Provider, from the government and appointed by the GSTN itself. So here it provides a host of features such as managed GSTR filing, reconciliation, data preparation, data validation, e-way bill automation, ERP integration in itself, and finally e-invoicing. So that's a small gist of what we offer. So for the next half of the webinar, I'd like to introduce our guest speaker and knowledge partner, Mr. Vishwanath from Lakshmi Kumaran and Sridharan attorneys. So here he has been associated with Lakshmi Kumaran and Sridharan, Bengaluru, for more than 6 years and has a decade of experience in indirect taxation. He is also enrolled as an advocate in the Karnataka Bar Council. His previous stint was with the Big Fours in the indirect tax service line, and he has completed his articles in taxation service line, including corporate tax and international tax. We are absolutely glad to have you here with us today, sir. You can take it forward from here.
Yeah, sure. Thank you, Siddharth. Thank you for the introduction.
Yeah, I will be stopping screen sharing. You can take it forward, sir.
Sure. Yeah, let me just start the screen sharing. Yeah, hope the slides are up and visible.
Yes, yeah, we can see it.
Sure. Thank you. Yeah, thank you for this time. And this is a third in a row we are carrying out for dissemination of knowledge, or at least the information what we have about e-invoicing with Web Solutions. Thank you for this opportunity for giving this. And a very happy New Year to one and all in this webinar. Thanks for all your time. So that today's talk with Metro Cash and Carry. In fact, I learned a lot. Though we are partners with Metro Cash and Carry for last 3.5-4 years. So the journey of e-invoice, especially a business reform like this, or we can say a tax business reform, because tax is getting into every domain, is like what Mr. Devavrat said. So with that in mind, we had to be ready for the change management. And failing to plan is planning to fail is the pro we all know, but it's always important that a well-planned action will give a smooth transition, and having a good transition will always have a better results. And especially the GST compliance is what we are looking at, and reporting. So with that, from L&S, what we thought again today is to provide the insights about e-invoicing. And like I said, this is the third in a row with the solution, and we have been conducting the e-invoice webinar since last 1.5 to 2 years. For those who are attending for the first time, it may the slides are up and there, but there are who are already repeated. We'll try to cover the scenarios and the issues, and because on a day-to-day basis we understand so many issues will come up. We will try to, in the next 1 hour, we will try to ensure that we will try to cover the issues, because what, when, how, the basics of e-invoice is already in place, and 500 crore and above associates have already done their part by October 2019, and January 2021, 500 crore and above associates are already into place. So what we try to cover today is the legal framework, applicability, non-compliance is what happens, few scenarios and issues, because most of our clients, on a day-to-day basis, we have multiple issues and challenges which we have to address them. So we'll try to give a few pointers which we thought will be useful for everyone because of their day-to-day handling. Now there's nothing transparent. Everything is transparent, rather, is what I can say, because tax and technology is going hand in hand. When I say transparent, the transparency is about the reporting aspect of it. Unless otherwise, in the earlier regime, our CERMAT register was with us in a book, and the officer used to sign. All those things were there. Now everything has to be uploaded on the computer and computer network. So with that in mind, it is not only a tax law we have to look into, we have to look into the technology law as well, and the surrounding laws which have an implications on our business. So with that in mind, you can see what is mandatory and what is not mandatory. What we thought mandatory from applicability and non-compliance is mandatory from a legal point of view. A legal framework, we will definitely try to tell you the legal framework point of view. What is the legal framework within which we have to ensure that the entire e-invoicing ecosystem is into place. So what is an e-invoice? We are just trying to give an additional point. It's a document. It should be a GST document. It is a document, but it should be a GST document if it has gone through the process of technology law as well. And it is an electronic record, because now it has a legal sanctity in terms of IT Act also. When we read Rule 46 and other rules together, read with the GST law, it is an electronic record. So what is a document and what is an electronic record? This document, it includes printed or written record of any sort, and also includes an electronic record. And electronic record is something which is generated, stored in the electronic form. And the electronic form is always with respect to our information technology, network, software, or its connected matters. So why it's important, why we are discussing that in this system is because when we are from a legal point of view, we're looking this entire thing from a legal point of view. We have to ensure that the system has enough capabilities to have generation capability, storing capability, retrievable capability, because this is the trail at which after a few years we'll have any issues. Because if you are unable to trace back this trail, it will have a serious implications, because law clearly says that every SSE has to maintain their books of accounts, and e-invoice being one of the document under the law, if it is not properly stored within our system, forget the system of government, because it goes 24 hours and it goes to GST and etc. That's a different point. But did we have enough system in place to have the backup of this data and we can retrieve it? So this is in that context, this entire sections will be relevant, is what we thought. E-invoicing system, government since last 1.5 years, or rather 1 year from since the time we have been discussing about this, they are always saying it's always a portal which registers the details. So far, the objective of the government is to register the data so that the disclosure or the information passes on. As of now, it's not a portal for generation, which means that you stop your system today and you go and log into the system and generate the invoice. That is not the objective, but it can be the objective if all your mandatory, non-mandatory fees, etc., whatever you are having your business day-to-day invoicing, that if you want to implement through that portal, it is possible. But as it stands today, it's a portal for registering the data, which means that you have an ERP, IRP or your solution providers From there, you have to register this to the government portal. So that is the intention and the objective. You have to register the data so that the data can be used by the government, and it will be stored, it will be used for various business analytics purposes also. So the time frame, I need not get into this because I'm just getting into the root of it, because 35th and 37th are the council meetings where this idea was populated, especially in the context of tax evasion, or rather, one is tax evasion part of it, other one is to create a business standard wherein an e-invoice, it can be accepted within India. So maybe once we go global, it's possible that the global standards may also be coming into place, because many countries have already implemented. So it's only a matter of time that when we move from local to global. When we say local to global, I'm talking about the e-invoicing global scenario. So that that being apart, that is a long standing. But as it stands now, the root of it is on 35th and 37th GST Council meeting, wherein they formulated this idea. And today, what we are seeing the system is the agenda notes which is come from them, which has been implemented, and it has been over a phased implementation. Like Mr. Debabrata said, it has been a phased implementation from 500 processes to 100 processes, and they are going for lower processes as well, maybe in the future. But what we are looking at is whether was there sufficient law in place for this. So that is where the legal framework is coming into place.
Yeah, Mr. Vishnath, sorry to interrupt here. I'd like to intervene here and just launch one more poll. So you have to give me a minute over there.
No, sir.
Yeah, so I hope you're seeing this on screen. Does the customer sharing their experience directly help? So I'm leaving this for the next 1.5 minutes before I end the poll. Once again, thank you all for joining. If there's any questions that you'd like to ask, we can take that up towards the end of the session, where we have a dedicated 10-15 minutes for the same. So any questions there is, please put it on the chat. Okay, I'll be ending the poll. Thank you. Yeah, so you can proceed, Mr. Vishnath.
Sure. So what I was saying was this, the legal framework part of it. Were there enough law in place to ensure, or to ensure that the e-invoice laws has already been communicated? Because once the law or the legal framework is ready, then the nuances, the procedural nuances associated with it could be well articulated and well communicated. One second, I think my sheer. Yeah. Okay. Sorry. So the procedures. One is the legal framework, the procedure within which we have to act, because there were a couple of changes even in the versions of the schema, wherein some fields were mandated, not mandated, and there were representations filed. After that, the non-mandatory field has become mandatory, or mandatory has become non-mandatory. So these things are bound to happen, or it has happened. But the point is that we know these things in place. One is that the 88 of 2020 is the notification. This is the notification which has superseded, or which is amending the earlier notification, because 13 of 2020 was the earlier notification which said 500 crore and above SSC, and 100 crore and above SSC has come from 88. So this is the notification which is important. Maybe in the coming days, this notification may go under amendment, because if they're going for a lower turnover SSCs, definitely this notification has to get amended. So that is one part of it. And the next part of it is that section 73, that was a special position given only for those SSCs more than 500 crore and above, because that was the initial phase of implementation. And as we stand today, we are not seeing any more notifications like this for giving special procedure or relaxation, because the implementation is going smoothly, is the way we can see, by way of industry or trade having no much difficulty by way of implementation, because January we are already in the, today is what, 12th, so we already moved ahead from this. So at the same time, 72 notification is important. This is the notification. I am focusing on the second bullet point there. Rule 48.4. If any of the SSC feel that they are unable to implement for e-invoicing, this is with the permission of the commissioner, you can get yourself exempted, subject to recommendation of the GST Council. So there are, if there is still a set of people who wants to represent them, you can definitely go and represent to your commissioner, and he can, maybe this can go up to the GST Council to take a separate exemption. What I'm talking is an exemption, not an exclusion, because there are a set of people who are excluded. That is different from the exemption what we're talking. Maybe you may have to see whether is there a real necessity for going to the government and representing your case to ensure that for some period, you may want relaxation for whatever reasons, which is justifiable, and you have a justifiable cause for it. And because budget, is already in the place almost in maybe another 2 weeks now. Apart from that, if there's a separate representation which has to go along, you may have to see for that as well. And 138.2, that A2, the notification, now e-way bill has also gone into e-invoicing. In other ways, what I'm trying to explain is that e-way bill and e-invoice are going to talk to one another by way of this rule. So these are the couple of notifications, and 68 is the main notification which is amended. That is where the entire e-invoice process has come through the rule. So the entire this rule, especially this notification 68, which is the main rule, which we talk about the e-invoicing process, etc., is coming through that rule, read with other notifications. So these are the couple of notifications which we thought we are important and relevant. Then at least my day is done if I'm able to properly communicate to you through this webinar, this slide. So my objective today is to ensure at least to put across our thoughts on this slide. This slide is the critical slide which we feel from a legal point of view. Section 12, 13, and there is a 14 also, time of supply provisions is there in one set of the law, and the other set of the law is the tax invoice sections. So as long as we understand these sections in its letter and spirit and with the legal understanding, then the e-invoicing ecosystem can be understood in a better way. Why we say that is because, see, section 12 and 13 is to do with when to pay taxes, which means that you have to pay taxes to the government on certain events or certain points in time. At the same time, section 31 says that when to issue an invoice. If you closely look at section 31, it lists down the scenario at which point in time when an invoice has to be issued, and they coupled with the rules, obviously. But take a case like advances. You got an advance for a service. It has nothing to do with e-invoicing unless I'll just try to cover that aspect in a better way in a couple of slides. But for this slide, if you look at advances for services, the liability to pay tax triggers, because advances, unless it's not a deposit, etc., it is going to be a time of supply. Therefore, you will end up paying the taxes. But do you have to raise an e-invoice at that point in time? And should we build a system intelligence or system configurations built around this to say that advance also you should raise an e-invoice? It should not happen that at the time of provision of service, again, we'll end up raising an invoice and duplication of the invoicing. And a duplication of e-invoicing will have a serious ramifications in reporting aspect of it. So therefore, section 12 and section 31, section 12, 13, 14, and section 31, though they are there in the law, we have to understand the nuances of the law. Take another case, where say, your goods are moving on approval basis. Goods are moving on approval basis. It has never been accepted by your customer. At that point in time, you will end up supplying the goods. When I say supply, movement is what I'm talking. When you move the goods, at that point in time, there may not be a payment of tax because 6 months has not elapsed, etc. However, the goods are moving through the delivery challan. Then are you going to configure a system because every delivery challan is qua an invoice, and because of the e-way bill, you are going to end up making an e-invoice for it? Again, it will have a different issues altogether. Couple of other cases like job work, etc., which we'll deal in later. So what I'm saying is, at the end of the day, tax law, when we read the tax law, it's not only a tax law, it's going to be a technology-driven law as well, because every aspect of it is going to get reported. So unless we understand the nuances of each section and how it has an interplay over the system development, it will be very difficult for any tax or finance team to cope up with the coming up adjudication, assessment, etc. So with that in mind, kindly ensure that the time of supply and the tax invoicing what you are raising has been understood well in advance, and so that the correct decisions are made at that point in time. So with that, couple of other sections which we have, which will be relevant is Rule 46. This Rule 46 is the field which are mandatory fields, which shows that an invoice has to contain, subject to some deviations within that rule also. Rule 48 is the main rule which has been implemented for e-invoicing, which we all know now. There is notified class of persons which has 500 crore and above, which has been brought down to 100 crore and above, which we'll see. What is important is invoice issued in any other manner is not treated as an invoice. So which means that this is the rule, sub rule 5. This says that for these class of associate, if you are not doing an invoice like this, it is not an invoice. So there are a couple of penal consequences or other consequences which follow, including business issues. what is important is, did we ensure that the invoice which we ought to have issued was issued under the as per this. Take a case, I understood to be a B2B invoice, and I never raised an e-invoice. But my person who is raising an invoice, he thought it is B2C. Ultimately, it ended up become B2B. So B2B, you have to follow this, but B2C e-invoicing may not be applicable. So did we end up with those invoices, and because of which penal consequences, or later on department asking various questions, how are you going to deal with those situations are very important. Therefore, invoice issued in any other manner is not treated as an invoice. The law itself is clear now. Similarly, we have already an e-way bill law on the same thing. E-way bill that does not have part B is not an e-way bill. The same way, there is a rule in the invoice also, which means that it will have a serious ramifications, which we'll discuss when we talk about the consequences. Couple of other points: duplicate, replicate copies. Now they are going to done away with if we are going to issue on an online basis or a e-invoice basis, electronic mode. So this triplicate, duplicate, all these pink color, blue color in olden days we used to have all these colors. Color combination is also be going on. And at the same time, there's no requirement of duplicate, replicate. But as a matter of practice, as a manual process, if you're still following, continuing, then you might have to continue with that, because manual process is different from electronic process. That is the difference, and for that we have to understand Rule 46 in its proper perspective, especially the proviso to 46. If that is understood, then manual documents versus the electronic documents will have its differences, is what we thought. And on whom, etc. This is a notification. Everyone by this time would have known. 13 of 2020, amended by 88. And now again, it has only a couple of points. There were some nuances in those notifications, which has been rectified over a period of time. And now any preceding financial year is relevant. Therefore, any financial year starting from July 17, the moment you have a turnover excess 100 crore, you have those assessees, if they're supplying to a registered person and for exports, those cases e-invoice or the Rule 48(4) will kick in, which means they'll get invoked, which means that you have to comply with this process of e-invoicing. So this is the legal framework, is what we thought we'll bring to your notice. Now, let us understand the mean, because here we discussed few things. One is, there are a few nitty-gritties here. One is, it says that I should be a registered person and my aggregate turnover in any financial year exceeding 100 crore. And if I make a supply to a registered person or for export, I have to, I'll end up be the person who has to comply with the e-invoicing provision. Now, the point is, what is the aggregate turnover? Couple of points we thought we will decipher at this point, so that we are clear, because we have come across in last 4 to 5 months, and before that also, there are borderline associates who are unable to understand whether they are really into e-invoicing. Though there is a system in place, put your GST and it will show you whether you are a 100 crore and above or below 100 crore and above, you go for applying, etc. Did you really fall within the 100 crore and above? And was your reporting for the previous year was proper? Was your previous year reporting, because it all depends on the data which is already gone into the system. So if the data which has already gone into the system never captured, but you are supposed to cross 100 crore, but because of which you never cross 100 crore, just because of the data, are you still absolved from your liability of e-invoicing? So those things are, those are the nuances which maybe system may not be able to immediately predict or provide. But at the same time, as an assessee, you have the data, and we have books of income tax books, we have financial books, and it will be reported, and we have regulatory authorities overseeing it. So all these things are very important. So what is aggregate turnover? Aggregate turnover means, for the GST purposes, at least for the e-invoicing purposes, value of taxable supplies, all taxable supplies, all exempted supplies, includes your export of goods and services, and it also includes within 2 GSTINs or within different PANs or within the same state, if you are having 2 GSTINs and if there is a supply happening between those things, those 2 GSTINs, those turnovers are to be included. It has to exclude only the taxes and RCM on which you are paying under reverse charge. It does not exclude, if I am a GTA and if I am providing on my outward as an taxable on which my customer is going to pay, or as an advocate, if I am paying, if it is outward is 100 crore and above, it does not absolve me. It's for the recipient point of view is what they're saying, which means that if I am that company, which if my inward supply on which I am paying RCM, those are not considered as turnover for the purpose of invoicing or this aggregate turnover purpose. So this is already there in the law. So now couple of questions, advances. What will happen? I got an advance. Now the question or fundamental question which remains here is it an advance for business purpose, or is it an advance for goods, or is it an advance for service? When I say business purpose, I'm talking about the balance sheet, etc. I'm not getting into that for this e-invoicing session. Is it an advance for a goods, for a future supply of goods, or is it an advance for future supply of service? Like we all know, there is a notification 66 which is already saying that advances time of supply you have to follow as per invoice. It need not be for advances receipt basis. So the question is it an advance is a tax aggregate turnover? Now the question, the fundamental question boils down here, because we came across certain situations wherein we have a works contract service provider. He got an advance. Now the question is that advance he is adjusting it for his billing, and that in itself is a milestone, and it has become a continuous supply of service. Question now is, should he raise an invoice, or he should simply pay taxes and done away with and showing in disclosure in GST 11A, 11B tables or whatever? The question of, therefore, how was your contract awarded, or how was your contract framed, and does it say that it in itself is a milestone? Then you will obviously, by virtue of section 31(5), you will end up raising an invoice for that advance apart from raising a receipt voucher. So these are the nuances which will have an implication, and that reporting or non-reporting may lead to the turnover issues, which may crossing 100 crore, 500 crore, etc. So now the question is that advance, is it a turnover or not, is a fundamental question which every SSC has to determine based on the nature of customer, what they got. Similarly, cross charges. Cross charges, when we say cross charges means we assume there is an inbuilt supply. If there is no supply, the question of cross charges does not arise at all. So therefore, the question is there an inbuilt supply with which you ought to have raised, but you did not raise, whether for lack of understanding of the law or whatever, or it was not raised, or I have excess credit, revenue neutrality, all this. The question is only one thing. Did you raise, was there a taxable supply, and was there a service which invoice has to be raised, and because of which your turnover is going to cross 100 crore or not? Couple of other points we have issues is books versus income tax. Income tax records shows on receipt or some other basis, accrual basis. At the same time, GSTR 1 and 3B would have underreported or over-reported, and there was, because of the GST law in place, no one was understanding the law or reporting aspect of it. So, and annual return corrections were not done properly. So there will be various other nuances which has come up. So the question is, how are you able to determine your 100 crore? Are you considering these factors? Or this, when I say your 100 crore, it does not mean your 100 crore, it also goes to your vendor also. Because you have to look at from your sales point of view, your vendor sales point of view as well. So outward turnover, RCM, net, sales returns, was it correctly reflected, and because of which 100 crore or not was breached, etc. Receipt versus accrual, I just mentioned. B2C versus B2B. B2C or B2B, as long as it's taxable or exempted, it will come under within ambit. The question is only, was this turnovers understood in a correct perspective, and was the reporting so far has been done in a correct perspective is very important. To understand whether our suppliers are breaching 100 crore, so that they will fall under this e-invoicing or they are not. At the same time, for us also. That is as far as turnover is concerned. Now coming to the scenarios on which e-invoice will apply, the general scenarios which every e-invoice will apply is the domestic sale, which is B2B. B2C is outside because the notification clearly told by a registered person to a registered person, which we highlighted underline. So therefore, the notification so far does not envisage a situation where a registered person, when he is making a supply to unregistered, when we talk about unregistered, kindly note we are talking from GST registration point of view, and we should not get any other point of view, because registered person under the law clearly defines to mean a person who is registered under section 25. So those are the persons we are looking at. So that supply is what is important for e-invoicing. That is one aspect of it. Same PAN between two GSTINs is another issue which e-invoicing will trigger, because both are registered at the same time. Export, we have a couple of issues here. Export is specifically brought in by way of an amendment so that this is taken care. But every export need not be for a supply. It can be for other than supply. Take for example, warranty. I am going to supply I have to supply to my customer as a warranty supply, and it is part of my warranty obligation. I will end up raising a delivery challenge than of an invoice. And because of which, if you have configured your system to say that you have to raise an e-invoice, you will end up reporting it, and for which foreign currency may not come, you will end up GR waiver, etc. Other RBI issues will come up. At the same time, you will end up reporting a turnover which will lead for a incorrect refund, maybe because that has gone into an export, and there could be a possibility of claiming refund on that, which is never an export, because it's not an export. it may be an export for the purpose of customs and GST, but it is never a supply for the purpose of GST, because that supply never happened. Take a case for exhibition sale or sale on approval, which has gone outside India. The question is, what is that we are looking at when we design a system? When we say export category, do we have other checks and balances to see in place, whether it is under warranty, whether it is for custom, whether it is for exhibition sales on approval basis, it is not a supply return. So many things are there. Purchase return, I would have imported and I'm exporting it back. I never accounted it as my purchase and I have to export it back, and I never intend to supply, because I don't want to take the risk of that. Maybe it may be hazardous goods. Why will I get into other obligations under other law? So these are the things which you have to consider when we talk about exports. Then sale of alcoholic liquor for human consumption are exempted goods. These are all exempted, therefore it will come within the definitions. But for this specifically, e-invoice may not apply. The reason being, it's only for a taxable activity and not for an exempted activity, which is coming out through Rule 48. So those, and it is already clarified in various FAQs by the government as well. So exempted items, there is no requirement for e-way bill. So that is the distinction. Again, when we sit and decide for a planning for a system development integration, these are the things which will come into place. And if I have a customer who is only for GST-IN purposes, he is registered. Take for example, a TDS registration, government. He took only for that. Otherwise, the government never bothered to get any registration. I will end up raising an e-invoice on him because I'm going to use this TDS GST-IN for the purpose of my sale, as long as I'm more than 100 crore and above. So those things we have to ensure and factor it. So that is about the applicability in certain scenarios. This is as far as numbers are concerned. So we'll not discuss much on this. Exclusions. Kindly see, these are the exclusion categories. There is an exemption category which I told earlier. You have to apply for exemption, maybe a commissioner with his approval and going with GST council. That is an exemption category. These are the exclusion categories. Government in its wisdom has thought that, or the legislature in its wisdom has thought that these are all the categories of people on whom the e-invoicing need not be applicable. Unless there is an amendment to the notification, these persons, as of now stands today, they may not follow the e-invoicing process. But there is still an ambiguity in these categories of people, because is it at entity level? Because I am as a bank, I have banking business and I also do auction sales, and I'm going to do an auction sale, and that auction sale, my customer wants an e-invoice. He's saying, because ultimately the person who is buying, he wants an e-invoice from us so that he can take credit. Now, is it at entity level? Any activity which it does, if it goes without e-invoicing, then the entire invoicing what is issued so far is not required, and whatever invoices he is issuing was on a regular basis, that will be the normal invoice. Then what will happen? We'll have two sets of invoices. Three sets basically. 100 crore and above. I'm talking about a vendor point of view. I have an 100 crore vendor. Out of a 100 crore vendor, I have to see, my primary assumption was entire 100 crore vendor, he has to do invoicing. Then I have to figure out these people who are not required to raise, and they have to raise the normal invoice. So then I have to devise my system in such a way that my credits are not loosed, and do I have enough system in place to track the IRNs for my purchases and differentiate between them. So these are the points that you might have to consider. Documents. When we talk about documents, there is, when we see the law, it will be difficult for sometimes for us also to advise the clients, because the law says otherwise. This is a classic example. If you see the law, the notification only covers tax invoice. The debit notes, credit notes are not technically covered within the meaning or within the notifications, but the system development has already gone ahead with the debit notes and credit notes. So I thank God there is no delivery challenge, bills of entry which has come into place. There are clarifications, etc., available by an FAQ, etc., but still there is a clarification missing from the government. That is something, government, if they are going to provide a clarification through their methods, that would have been a much better way than by way of a clarification or FAQs by the developers like NICs or GSTNs. That will have a better advantage, because as we stand today, there is something called Rule 49 and other rules. And those rules are so far not amended to come within the ambit of e-invoicing. Sorry, the debit note rules, not the 49, but bill of supply. Debit note and credit note rules, those rules are still not amended to include e-invoicing within its ambit. So there is still a gap that any other document in the notification may not be a legal thing, but yeah, we have to see how exactly this is going to come in place. As it stands today, the implementation has debit notes, credit notes, invoices, and invoices. When you talk, it includes export invoices as well, and B2B invoices is what we are looking at. So those are the taxes. So there are certain legal nuances, and there are certain other challenges which an SSE can face at the time of e-invoice implementation, and subject to the way the APIs and other things are getting developed. Few scenarios we thought we'll cover. Definitely, the cutoff thing is a point wherein 1st January was the cutoff, and did we raise an invoice for the invoices to be raised on the 1st of January? Is the question is, was it to be raised on 1st of January? Is a point of debate for every SSE. They have to see whether it is an invoice for the previous period they're raising on 1st, or is it an invoice for the 1st which they're raising on the 1st as an advance. Those are the nuances you can see. Job work goods. This is critical. Take a case where job work I have sent for, say, in October, or say previous year, June, July. Now 6 months have over, or 1 year, you take the last 1 year. Now the goods have not come back, still 1 year. Then I had to end up raising an invoice, but goods have already gone. So those invoices will have a triggering of e-invoices, and this can be easily tracked on the way of ITC04, etc. So those things is important. Now we are looking at the business intelligence systems. Therefore, do we have enough systems in place to track those and raise an e-invoice automatically by the end of 361st day or 366th day, etc. So those are the things one have to consider. Debit notes and credit notes pertaining to the goods already supplied before that. If we are going to raise it, obviously we'll end up raising an e-invoice for those transactions as well. And whether we have a checks and balances, though we don't link it, do we have a linking at least for our internal purposes, etc., is very important. We ultimately, and linking between debit note and credit note for the 1st invoice, with respect to the 1st invoice, is very essential. Not now, at least at the time of audits and adjudications and assessments. Kindly note all those aspects. So I'll not get into the certain FAQs which has already been there in the public domain, like exempt supply should I raise an e-invoice? Obviously, answer will be no. High seal sales, bonded warehouse sales, these are all not at all a supply. Therefore, not all a supply of goods or services. There's no question of e-invoicing. So reverse charge cases, there are clarifications which says that if it is my purchase thing, I need not do it. But if I'm an outward person and I am breaching this, I have to do it subject to the exclusion category, like GTA, etc. So those are the things. These are the portals which are live, which are supposed to be live. The first one is already in live, because I think this other portals this one portal itself is able to take the load for entire GSTIN. I was just having I was just going through the list of GSTINs who are generating e-invoice. So there, Karnataka itself, I mean, so we are from Karnataka, therefore 3,641 GSTINs are currently raising an e-invoice. So with that in load, I think this one portal, one login is able to take the entire load of India. So maybe other logins, if only on a need to know basis, government may enable it. So just one information. But anyway, what is important is these are the portals. These are the government portals with which you have to generate the invoice. So therefore, if you are going with your solution providers, ultimately it has to push to the portal through this. Maybe so your solution providers can be the better person who can advise and guide on this aspects. What are the portals which has to get? So a process, we'll not get into this because this process is everyone knows by this time. Your ERP is there. You have a solution provider or other ASPs, GSPs which you can use it of. And through them it goes to the IRP portal. IRP portal gives back you the IRN and QR code. What we are looking at is a QR code embedded IRN, which means that if you look at the QR code, it has an embedded IRN in it. That is the critical point. As long as that process is done, your legal compliance can be said to be done. So that is the point you have to see. And then it goes on to push to the portal to GSTR 1 and 2 way. We are seeing that now the portal is throwing and rapidly it is getting real time, because there was a time lag for so many months, but now it has been speeded up. So you can see it has gone. The moment you generate an e-invoicing, it's going and sitting in a GST1 corresponding to 2A and 2B. Those process flows are already in place. So what goes? Kindly note 4 things. These 4 points. I'll be a little faster. Kindly excuse me, because our objective is to discuss more on the scenarios, so that the process or the speed in which I'm talking will be little difficult. Kindly adjust your voice accordingly. So 4 points is very important in an IRN. Your GSTIN, financial year, how we'll get through the document date. So therefore, a financial year is already in the background. They would have taken from, say, if it is today, they will go ahead with financial year 2021. So that's the way the system design will be there, or inbuilt algorithms. The document type will be 3 types: invoice, debit note, and credit note, which includes export invoice as well. That you can note all those aspects. Document number, which is critical. So these are the 4 essential the data which can't be altered for an IRN is what we believe, because these are the 4 things which go as a seed to get the IRN. If these 4 data itself is altered, you will get a different IRN. So every IRN is a combination of these 4 characters, which is a static characters, without which the IRN can't be fetched. So if there is any change in this, take for example, instead of raising a GSTN to a buyer, I raised a other GSTN. Therefore, you can't issue the same IRN to this buyer because your GSTN itself is incorrect. Therefore, you will end up raising another correct IRN, and what will happen to this IRN will be a question mark. And how are you going to deal with it? The wrong raising of an IRN, especially when the time limit for cancellation has passed. So what I'm saying is these 4 parameters play critical role. Even the date. If you are raising on 31st of March 2021 or 1st of April 2021, it makes a whole lot of difference because of the financial year change. So kindly note all those aspects. So document type is again, if this should not be a clerical error, wherein instead of DBN, I saw CRN. Kindly note all those clerical mistakes should not be occurring, because this is where the training part will come into place, and we should ensure that the person who are raising it, at least the field selection which you are doing it should be proper. Because the moment you generate an IRN, it automatically flows to the system, and the data record is there. Like I told, a trial is already created, and how are you going to deal with that trial? Especially during audits investigation will be a point, and what is the compliances you have to follow for that. So this is what the IRN is about. QR code, kindly note the yellow bullet point. There's something called the date of generation of IRN. That's different generally from the date. It can be different from the date of the document, because the document date can be a date today, and if for some reason, for business or some clerical reasons or for a system reason, you push the data tomorrow, there is every possibility that the date in that data will be the future date, may not be that date. So what I'm saying is there can be a difference in the date. Your invoice date can still be today, but your IRN generation date will always have a trail, is what I'm trying to explain. So that is kindly note those aspects. So therefore, what is the point in time you sat before the system or you push the data for generation of IRN will be a critical point. That is something you have to see. So a couple of other points we thought will be this generation of e-invoice is always through electronic mode. It can't be through manual mode, because hashed SHA hash can also only be generated through computer means. Unless otherwise we have other means to do, but that's on, like I said, but ultimately the IRN functionality has to go through the system process through which this always has to go through the electronic mode. It can't be through offline mode. And in modes of electronic, we have direct integrations, like you can partner with various solution provider and get their assistance, or you can go directly through your GSPs or direct integrations. Those things are there, for which there are enough papers on this. There are whitelisting process you have to do. Your IP address has to be whitelisted, and you have to do testing and give reports so that they will allow you for production. And we have to ensure that all these systems are in place. We are not, we are today on 12th of January. If we are an SSC of 100 crore and above, these things ought to have been taken care much more prior date. But nevertheless, if you have time to raise an e-invoice because your supply is not at all complete, you still have time to ensure that the supplies which you are going to raise for e-invoices has these things already met. Unless these parameters are met, maybe your development or integration or pushing the data to IRP and getting an IRN same QR code will be a challenge. So cancellation is something we generally have issues with. Can we cancel? Yes, only within 24 hours. What happens after 24 hours? The question always remains open there. Is it a credit note method, or is it a correct method to disclose it by way of a letter to the government authorities and say what was the reason for delay in non-cancellation, etc. So it always depends on a case-to-case basis. So those things we have to say. Take an example. We have various issues which coming to us on a day-to-day basis. One of the issues is like I supplied the goods. Now it was about to reach the godown, customer's godown, but customer cancelled the order, and it is coming back now. But IRN has generated, and I'm talking from two different places. It has gone more than 24 hours. I can't generate an IRN. I can't cancel the IRN now. So, but he has not accepted my sale also. So the question is it a sales return? If it is a sales return, there is no problem. Credit note, etc., can come into place. But if it is not a sales return, then whether credit note issuance is the correct method or not is something we have to see. So these are the couple of examples which we can give. What will ultimately happen is if you're going to amend in GSTR1 table, you will end up, whether you're going to edit the data, and that will also leave a trail. So what is the correct process you are following for cancellation or unfructified sales, etc., or any other situations for that matter? Those things we have to discuss, and you have better to have a discussion with your consultant accordingly. What exactly to be done in those situations? Expiry of an e-invoice, there is technically no expiry because once it's generated. The expiry is only with the IRP portal because they don't keep it. They push it to GSTN or maybe other clouds, etc. That is something a system architecture level, which I'll not get into. But do we have the data? That is the point I'm looking at. So there is an expiry. That expiry is not relevant. What is important is, do we have the backup and we have trail for next 72 months from the date of generation, etc. We have to keep in mind. So non-compliance. What if I don't comply? Obviously, interest, penalty, consequences will come. Apart from that, what is important is now that e-invoicing is already in place, and through GSTIN, even patrolling officers can know whether your turnover is more than 100 crore and above. Your goods itself can be held on the road if you're supposed to raise an e-invoice, but you did not raise an e-invoice and you went through with the manual process. So those issues will come up. As of now, as it is, we have other issues on e-way bill. Now it's January to March, the revenue collection time. Otherwise, also we have enough issues on the road. So this will be an added issue if you don't comply with the law. So what is important is, during the movement, is it an invoice which has to accompany an e-invoice or not is something you have to see. At the same time, even a credit note, debit note, etc. Did you raise an e-invoice apart from delivery challenge? Those also should be taken care, because there are certain officers who are aware of, who can definitely look into the transaction and say, if this is a credit note transaction, which means that sales return, why was there no e-invoice accompanied along with the delivery channel? So those issues can definitely come up if there is proper system has not been put in place. And for information, though it is not related to e-invoice, the 100 kilometer has become 200 kilometer, which will have which will require an additional change in the traveling time, which means that you have to travel faster. So at the same time, you should have the documents in place. So those nuances you have to ensure and put the systems in place is what I'm trying to say. At the same time, recipient credit. If my customer is unable to take credit on my e-invoice, then my whatever process I have followed will be a problematic from a business point of view. So therefore, whatever the e-invoice we have issued so far, is it in proper place, and do we have enough checks and balances in place so that e-invoice is issued in a proper manner, so that the customer's entitlement to take credit is not done away with? Because if we raise an e-invoice, we have a case wherein they are supposed to raise an e-invoice before, say, debit note was supposed to raise before this amendment is what I'm saying. So within some date, but they could not raise, or credit note they have to raise, they did not raise. So because of which there are certain issues in credit note adjustments, etc. So those issues will have serious implications. So few points we thought, any system will have any change management, like Mr. Developer said, they'll have so many issues. But suffice it to say that you have customer forms in place, they gather the data, their GSTN should not be active, ensure that there's a sufficient clauses in the contract, put checks and balances, discuss with the team, assign roles and responsibility to the team, without which a planning, this requires a detailed planning. So those are the nuances which has to consider before implementing any change, and ensure that there is a seamless connectivity across your offices wherever the e-invoice has to be generated. And when we talk about e-invoicing, we are saying e-invoicing for a supply, obviously an underlying supply should always be there. Otherwise, it will invite its own penal consequences. So a supply with e-invoicing is critical. So with that, we thought we'll cover a few scenarios. These scenarios are the scenarios we generally come across. So e-invoicing, they generated wrongly. Take a case. I'm supposed to generate e-invoice X. I generated e-invoice Y. for whatever field error. That is one case, and there is a delay in raising the e-invoice. I know my invoice, my normal invoice is already there, but my e-invoice has gone next month. So there's a timing difference. So now the question is, a wrongly generated invoice, it always presupposes a question whether there was a supply happened or not. Which means supply is still in a hand. If you take a supply of goods, goods never moved, you raised an e-invoice and 24 hours has lapsed. So the question is, you cancel the e-invoice is not possible in the data because its system is already there. It has already gone through GSTR1. Can you raise a credit note for it? You can raise a credit note under the law if you have made a supply for which a sales return, etc. in place. So whether credit note is the correct process or not is something you have to see. Similarly, delay in raising of e-invoicing, there will be timing difference. How are you going to tackle it at the time of assessment? Because now everything is going to be system driven. Like 2A versus 3B, we may end up getting a notice in future to say that document date is so much, date of e-invoicing is so much, you have delayed the payment of taxes, pay with interest. Possible. This is a system driven world we are going to get into. So those things, those nuances, was it taken care or not? Warranty free of cost movement, did you really raise an invoice wrongly or rightfully? Was there be an e-invoice in its place is the first question. Old invoices cancellation, and now we are raising an e-invoice because of change in contract, etc. Those issues will come up. This is the common issue, the last but second bullet point. B2C, when I supplied, I thought is a customer who does not have a GSTN, but he has come up with GSTN. How do I deal with it? So there are multiple issues which you face on a day-to-day basis. It's suffice it to say, with this short span in time, there are nuances in e-invoices which we have to handle on a case-to-case basis to ensure that you have proper system in place, understand the laws in place, and have a discussion before taking any decision. So those things which we thought we'll put. So with that, we will take up the questions which has come up, or we could not see the chat box. So any other questions are welcome.
Thank you, Mr. Vishwanath. Thank you so much. As usual, it's been a wonderful session with you and a very highly informative session. So I think, like you had mentioned, this is our third session, right?
True, correct.
All right. So we do have a few questions on the chat. Okay. I'm not sure if you're able to see it, but there are a bunch of questions. But I'm not sure if we'll have time for that. So let us do one thing. We will take up the questions that have come through the registrations as discussed before. So we will start off with that, if that's okay with you, sir.
Sure, please.
Okay. So the first question is, can a business have its logo on e-invoice template?
Oh yeah. So yeah, this is a question. Even GSTN or other FAQs have clearly clarified it. Definitely, e-invoice. The moment we say about e-invoice, it's only a IR and QR code coming back from the IRPs. So you still have to affix on your normal invoice. So definitely you can print any other information which is otherwise you are giving to your customer. Definitely logo can be part of it. There's no harm or there's no problem in it.
Okay. The next question is, could we expect any change in our current ongoing system for the future?
See, the current, when you talk about the system, the first thing we have to understand what exactly the system they are running into.
Correct.
So at the same time, if you're looking at it from a legal point of view, I will tell you a couple of things like Mr. Debabat did comment, which was part of your question to him, which says that how are you going to see the return filing, in the future if GSTR1 and e-way bill is going to throw up all the data. So those system changes are the critical things from a legal reporting point of view. So those changes has to be taken care in your system. If you're taking care of those things at this point in time, at least you are ready for the future is what I can say for the time being.
Got it. So the next question is this applicable for B2C transactions as well? I believe the person meant e-invoicing applicable, most likely.
Yeah. This is a little common question, but B2C, if you're talking about local, no, but even an export supply can be considered as a B2C. So kindly note, when we talk about B2C, the B2C in Indian context, definitely the answer is no, because there is no requirement under the law. Notification clearly lays down. But if it is a B2C, when we in the context of export, it is still a B2C in the context of export. So there, apart from this QR code, signed QR code, you will end up doing that dynamic QR code as well. So though we are not discussing that as part of this e-invoicing, kindly note B2C export will also be considered is what I'm trying to explain. Otherwise, normal domestic it's not required. As long as you are sure he is not a GSTIN holder, he means your customer.
Okay. So next question is, can I issue signed invoices online and retrieve them from cloud for tax or GST inputs?
This will be a better way, is what I can say, in the sense that we are looking at a system where we raise an invoice. We have said, I'm looking, the question what I understood is from this perspective. I have a system, I have pushed it to the IRP sent back the signed QR code, and I have affixed my signature through digital means or whatever means, or without signature also, I have an enough information technology solution in place with which I am pushing to the cloud and client is accessing, my customer is accessing. So this, the last part of it, which I am sending, if it is in compliance with the IT law, that process, then the signature itself is not really required, then it is good enough as a document. So that is even what government also wants. So yeah, to that extent, yes, he can do.
Okay. So let me launch one last poll. While we continue with the questions, we will let this run.
Sure.
So I hope you're seeing this on the screen. How did you find the webinar session as of now? We'd like to know this. And I will let this run for the next 1.5 to 2 minutes, and we will continue with our questions. Okay, so the next question is, can I issue, I'm sorry, I just covered this, I believe. How to manage B2C invoices QR code? Does B2C invoicing require e-invoice validation or not?
See, yeah, B2C e-invoice validation is not required if it is domestic. If it is export, yes, it is required. Kindly note that aspect, because these things generally many people miss it out. And it should not be a case wherein you have raised an e-invoice, it has gone through customs port, shipping bill has been filed, etc. And then you will end up thinking I'm not raised an invoice at all. Then you raise one more invoice, and for which you go to RBI for rectification. So there are nuances in this itself as well. So when we talk about B2C, I hope we are looking at B2C domestic. That domestic does not require e-invoice validation. Therefore, it need not go through e-invoicing process. As of now, that is not the intention of the law as it stands today, at least. Because when we go out after the seminar, we may get up some notifications. So I don't want to comment on future things. Yeah, as I understand today, it's not required.
Right. Okay, so I'm ending the poll now. Okay, thank you for your inputs. So getting back to a few more questions. Is an invoice without biller signature valid?
Unless it is a information technology driven process. When I say this is a highly loaded word. What I said, as long as you are able to generate and store and retrieve it through electronic means, which means it is in your control at all the time, whether or not you go for an external solution provider, etc. So those things, if you are following, then it can be said to be an information technology compliant. Therefore, Rule 46 proviso, you can take the shelter of it. Possibility is there. Therefore, you need not go ahead. Otherwise, if you're still doing a manual process, definitely it's not possible, because signature is a critical aspect of it. So despite the fact it has gone through the IRP portal, etc., if you are still going ahead with the manual process of giving the invoice to your customer, was there did you really factor the signature part of it? Is still a point you have to see. I think this can't be there, because at the one hand you are saying I have an IRP system, etc., to push the data to the IRP, and the same hand, after getting the information, I am going to put it in a manual form. So those things are two different things. Those can't exist at the same time. Even if it exists, it's a difficult. It's a some issues will come up from GST point of view. Therefore, a biller signature is required if it is a manual document. If you're still following, that is something you have to see. When you say manual, you're taking away information technology from the entire chain of events.
Okay. Whether e-invoice or e-way bill printed with tax invoice to be attached through IRN, and e-way bill numbers are printed on our tax invoice. I am not sure if I understood this question properly. Let's just read it one more time. Whether e-invoice, e-way bill printed with tax invoice to be attached through IRN, and e-way bill numbers are printed on our tax invoice.
Yeah, I'll try to divide it. Maybe
Okay.
if he's looking at a scenario where for getting IRN, I had to push the invoice, PDF, etc. Those things are not really relevant. It's only a data flow. So that is not required. If his question on the first part itself is on a point to say that should I attach the e-invoice along with the e-way bill, then at the during the travel journey at this point in time, though the law says that he can give IRN number or etc., it is always a better practice to have it on the record as a document, because the patrolling officer may not understand the 64 digit. Even one digit is missing, then you will have a problem. And if his QR code scanner is not working, you will have a double problem. So on a lighter side, but still it's a issue on the road. It's always better to carry at this point in time unless we go paperless in the future. So that's what I thought we can comment on it. Yeah.
Okay. So I think one last question we can take before we close it. Please explain advance received transactions and how will it work in GST?
Okay, see, these advance receipts are tricky things. First thing first, advance. When we talk about advance, we are sure that this advance is an advance for, we should be sure that whether this is going to be for my future supply of goods or services. That's the only case we are looking. And I'm not looking at the balance sheet advances, which will be having a different advances. So whether it's going to be for my future supply of goods or services. If it is for goods, the only question remains is when I'm going to supply for these items. Maybe say I got 100 rupee advance, I had to end up supplying some say 200 or 1000 rupees, or I will end up supplying for 90 rupees. Those are all possible. I'm talking about the good situation. So in those situations, if it is advance at that point in time, when you make the supply of goods, section 31 will say when you remove the goods at that time you raise, or before that also you can raise. So it is ideal practice to raise only when the goods are loaded on the truck and they're going to move. At that time, raise an invoice. And at that time, your e-invoice will trigger. It will not trigger in the initial stage. I'm talking about the goods part of it. However, this advance is not a continuous supply of goods. That will have a different issue. So hope you are sure about goods versus continuous supply of goods. At the same time, when you got the advance, you will end up issuing a receipt voucher for which you need not configure an e-invoicing solution at this point in time because law does not require for it. So therefore, when you got the advance, you will end up reporting in GSTR 111A table. And when you raise an invoice, you will minus it from 11B table and report it in table number 4. So hope the table what I'm referring, the compliance part people understand this point. So that is one part of it. Second part of it is for services. It is very highly tricky. Unless you are sure and clear, this advance is not at all a consideration, because you will end up, there are advances where you will adjust it for your supply, where you will not adjust it for your supply. So as long as you are not adjusting and keeping it as a books, then you can always say that my time of supply not triggered and it's a deposit because it is not a consideration. Therefore, you can say I will not raise an invoice, but it is clearly purely contractual. Unless a contract is seen in proper perspective, no advice can be given, and I hope you understand that legal nuances in it. So it is better to have a discussion on this.
Okay, we will take one last question. So customers having GST in but procuring GST exempted goods, is e-invoicing required or not?
Customer is buying GST exempted goods, but he's having GST in. E-invoicing is not required, though he's a B2B customer. Though the law says registered to registered, still your checks in the system should be either is it taxable or exempted. If it is taxable only, you will end up pushing for e-invoicing. If it is exempted, there is no need at this point in time because law does not require. Therefore, if you are an in-house developer, you should check for the notifications change as well. Tomorrow some notification will come. That's why I try to put in my slides the notification 88. Because now we have some 95 to 98. So it's not only a tax advocate's job, but even for a developer job also is on the lighter side. But yeah, still at this point in time, it's not required.
Okay. All right. So I think we will close our questions with that. So any other questions that have come in, we will take that up sometime later during the week. And I'd like to thank everyone for joining us and making time and for having been throughout the webinar. Special thanks to Mr. Devabrat and Mr. Vishwanath for making time for this and sharing knowledge on the same. And we will be reaching out to all of you sometime during the week for the same. So if there's any specific requirements, any specific doubts that you have, we can take that up on a one-on-one basis. Once again, thank you all for your time. We look forward to seeing you in our future webinars. Thank you, Mr. Vishwanath. We will look forward to seeing you very soon. And on that note, have a wonderful evening. Thank you all. Thank you.
Thank you all.